How are you reading into the signs that we have been getting? Of course, this whole series of December has been tepid. There has been some kind of a numbness right here. Help me understand, how have you analyzed this entire series? Is it the China factor? Is it pure profit booking? What is your sense?
Yeah, thanks, Sakshi. Thanks for having me. So, if I talk about the December and this entire year as a whole, in this year we are up by around 4% on YTD basis. If you look at the last 12 months, 7 months we were negative, including the December, and only 5 months we were positive. But the good part is the declines were being bought. The major decline happened at the mid of the June, and those declines were being bought. So the clear trigger for the market or the conclusion for the market was the dips could be bought, but upside likely to be kept. And the same we have seen in the month of December, where index has corrected from higher levels. If I look at expiry to expiry basis, we are down by around 2.5%. And recently, the index which made the high of 18,887 is corrected all the way to 17,777. So we have corrected from highs, but now we are taking support at the lower zone. But again, the concerns are is we are heading towards the year end. Fall off is totally missing. So as of now, I look at the hurdle of 18,181. If those levels are surpassed, then only we can consider this bottom to extend the rally to us 18,350 to 18,442. On the downside, we need to closely watch the support of 17,777. So to sum up, 17,777 to 18,181 is the range. If 18,181 is surpassed, then only we can consider it for the next leg of upside move in the market. So one need to approach the market in that light note as we are heading towards the end of the year, and we'll see the even beginning of the year with the dull or slight choppiness kind of note.
Sure. Now, as we move into the next series, January series, into the new year, what to your mind will be the dominant theme right there? Will it be China again? Will it be the recessionary fears? Or will it be the pre-budget moves that we will be expecting? Your thoughts?
So if you look at the overall market and the volatility, because when you talk about the couple of things which are making the greed and fear, then definitely I'll talk about India VIX. Your India VIX is now near to 15.5, and we have seen a spurt in last week by 15 to 16%. So volatility is slightly recovered from the lows, and because of that, your market is also finding tough to hold at higher levels. So obviously the global market and China concerns are there, but I think dips could be bought because of the budget. So budget China theme, these are likely to be the key trigger, and then India VIX will provide the sentiment and market eternal to goes the same. So I think these are the factor one need to keep track, and these are likely to give the setup and the momentum to the market.
Okay. And as for the strategies for investors for the new year, what would you really recommend the right way to really approach the markets in the next year?
So see, there is no doubt about the outperformance of India. In this year, we have seen a consolidation. 2020, we have seen good recovery. 21 was the perfect bullish year. 21 was more of the sideways, but dips were being bought. So I think after the rally of last 2 years, this year was a sideways, and again the next leg of rally cannot be ruled out in the 2023. And Sakshi, if I look at the data set of last 20 years, in last 20 years, only 3 years the index closed negative on year-to-year basis. So I don't see any reason that why should market go much down. Yes, global concerns are there. So to sum up the same, I believe decline could be bought in the market. As of now, 17,777 is the major support. Any decline towards the same could be bought. And I believe that after the consolidation of couple of days, the index will head towards 18,442 and 18,881. So going forward in 2023, we believe that market has potential to move by 8 to 10% from current levels after the good consolidation of 2022.
If you like the video, do like, comment, share and subscribe.